All right, guys, the big question is, has the market officially shifted? On this month's episode, I'm going to break down all the numbers for you and show you what type of market we are in today. Here we go. All right, guys, what I want to do is start off by showing you where we are today. So basically over the last 30 days here, we've seen just over 2,300 homes come on the market. Nothing to write home about, pretty much what we've seen over the last 6 to maybe even 8 months. The second stat that we're seeing is about 2,000 homes actually closing, being totally removed from the market and closing, once again, very similar to what we've seen. The only little shift that we're seeing this month versus some of the previous months, so we've only seen about 1,700 homes go into escrow. So there is about a 500 home swing from the amount of homes that are entered escrow to the amount of homes that are coming on. Now, this is nothing to write home about. Pretty similar stats that we've seen over the last 6 months. Nothing substantial that I would worry about. However, we have seen more inventory come on the market these last 6 months than actual sales happening. So we are starting to see a little imbalance in the market. So now into kind of answering the question that I started off this whole video on, and that is, what type of market are we in? Well, I would say we've moved away from a seller's market into more of a balanced market. And I've talked about that in previous episodes. And we're kind of teetering on the edge of almost shifting over into a buyer's market. And the reason I can say that is if you look here at the chart, we're starting to see some indicating signs that we're starting to shift into more of a buyer's market. The first thing I want to point out here is new listings this year has increased about 11% compared to last year at this time. So that's showing us that we are getting more inventory. Second thing that we're looking at is pending sales and closed sales. Sure enough, they are down a little bit, but that's to be expected with everything that we've seen kind of happen this year with our economy and obviously the new government going into play. We've seen a lot of hesitation from buyers. Buyers kind of pumping the brakes, sitting back, and they want to see what's going to happen in our market. And that's totally acceptable for what's going on. The other stats that I'm seeing that really jumped out at me that are showing that we're starting to see a little bit of a shift here is the price of the closed sale to the actual asking price. And sure enough, that's down 1.3%. So that's showing us that more homes that are on the market are having to negotiate to go under contract. So buyers are getting a little bit more negotiating power, and that's great for buyers out there. We've been on the opposite end of that for a long time. So it's great to be able to negotiate right now. The second stat that is starting to increase is days on market. So we're starting to see that higher amount of inventory with basically similar buyer demand, causing homes to sit on the market a little bit longer. And that's up 17%. And then kind of the one kicker here that I do like to see, and this is definitely going to help our market kind of regain some steam here, and that's affordability going down. Now, that has happened because of two things. One, we're seeing buyers being able to negotiate, bring down prices 1.3%. Also, we're seeing interest rates come down. And the Federal Reserve just came out and didn't do an adjustment to the federal rate, but they are putting money back into the market by buying bonds again. So that has caused interest rates to come down about 0.25%, and a lot of us are projecting they should continue to drop about 0.5%. So we could see rates back down to about 6.5. So guys, what does this all mean, right? If we look at all these stats, what do we think is actually going to happen, right? Well, if we look at historic data and we look at what this data is showing us, we're most likely going to see a small window here where some opportunity happens. And I've seen this over my 17-year career happen multiple times, right? So we see a little bit more inventory than buyer demand. We see it swing to the buyer side to be able to negotiate a little bit more. And that's probably what we're going to see here in the short term. Now, I can confidently say that I don't expect prices to adjust downwards, anything significant. And the main reason being is that the Federal Reserve holds the ultimate lever to stop any adjustments in pricing. And what I mean by that is the Federal Reserve just has to lower interest rates. And we're still at such a high interest rate, federal rate right now, that if they just lower the federal rate by 1.5 or 2 points, we're going to see a lot of buyers re-enter the market. We're also going to see a lot of homeowners want to sell their property finally because rates are coming down on the buy side and buy something newer or something new. So we're going to see a lot more transactions kick off once interest rates come down. And when I look out at some of the analysts who are laying out their projections for this year, almost nobody is showing a negative adjustment on pricing. Most people are flat to 2 to 4% increase. I'm still optimistic that we're going to see somewhere around 2 to 5% increase in San Diego County. And then sure enough, if we look at Zillow's predictions, they did just lower their nationwide projection, but they're still showing a positive appreciation for this year. So I don't think we need to run for the hills and think that the market is going to correct significantly. I think we can feel confident, especially us in San Diego, especially in markets here that will always have demand. We can feel confident that values will stay consistent. All right, guys. So I always want to end the newsletter with this type of update, and that is giving you guys my buyer and my seller advice for this month. Buyers out there, I'm watching a lot of my very savvy investor clients kind of move some money into the real estate market, right? And that's very typical at uncertain times because the real estate market has always been somewhat of a safe haven, right, for investment. It's a long-term, slow growth investment, and people see it as a safe investment. We're seeing that unfold. So if you're a buyer out there, you might want to follow that trend of some of these really wealthy, savvy investors. For my seller clients out there, it is all about preparation and price. The homes that don't show well, that are overpriced, they're just not selling right now. And you need to make sure you're that next to sell home because there's just, like I've talked about on this episode, not a big pool of buyers right now. So make sure you prepare your home and price it right. And right now, more than ever, hiring a professional like myself or my agents here on my team matters. So if anybody has any questions, please reach out to myself or somebody here on the True Local team. Look forward to talking to you. Drop a comment or a question below. All right, guys, take care.